We're looking at high dividend stocks with 10% or greater yields. These could be great contenders to create a largely passive income stream with minimal effort and investment. I've learned the hard way that higher yield stocks tend to be riskier. These companies can be beneficial for investors. They typically pay out a large percentage of their cash to them via dividends regularly. That leaves less room for error in case market conditions to get worse, which could force them to cut their payouts. Dividends can be a great way to boost your investment portfolio income, which many people are looking for during periods of high inflation and amid talk of a possible recession. Dividend stocks and dividend funds are a great way to earn interest passively. They're usually from larger, more established companies and provide regular passive income. This video will look at 4 tickers with dividend yields higher than 10%. This includes Barings BDC, ticker BBDC, Capital Southwest Corporation, ticker CSWC, Triple Point Venture Growth BDC Corp., ticker TPVG, and USA Compression Partners, LP, ticker USAC. Starting with number 4 on the list is Barings BDC Incorporated, ticker BBDC. Barings BDC Incorporated is an externally managed business development company that primarily makes debt investments in middle market companies. Looking at the daily chart, we are still at roughly a 12% discount over the trailing 12-month period. Zacks Research ranks Barings as a rank 1 strong buy with an overall VGM score of B. Looking at tip ranks, they score Barings with a number 9, outperform, based on 2 Wall Street analysts offering 12-month price targets for Barings BDC in the last 3 months. The average price target is $10, with a high and low forecast of $10. The average price target represents an 11.11% change from the last price of $9. Barings BDC's market cap is currently $979.49 million. The company's earnings per share trailing 12 months is 29 cents. Its PE ratio is 30.50, and it has a dividend yield of 10.63%. Barings BDC is scheduled to report earnings on February 28, 2023, and the estimated EPS forecast is 27 cents. Last quarter, Q3 2022, their total revenue was $12.61 million, a decrease of minus 24.55% from the previous quarter. In Q3, their net income was $9.89 million. Barings BDC's total assets for Q3 2022 were $2.65 billion, a decrease of minus 6.45% from the previous quarter. Their total liabilities were $1.42 billion for the fiscal quarter, a minus 10% decrease from the last quarter. They had free cash flow for Q3 2022 of $122.35 million. For the 2022 fiscal year, their free cash flow decreased by minus $178.42 million, and operating cash flow was $122.35 million. Barings BDC pays dividends every quarter. Their next ex-dividend date is December 5th. Their dividend per share is 24 cents, with a yield of 10.63%. Their payout ratio is 91.78%, which is sustainable. Using the dividend calculator, let's look at the projected annual payout and total possible dividend payments based on today's numbers. By buying 500 shares, with a total investment of $4,500, including the DRIP strategy, and holding these shares for 10 years, we can see an ending balance of $12,845. We have a total return of 185.46%, which averages an annual return rate of 18.55%. An initial investment of $4,500 would provide an annual dividend payment of $1,279.15. Hedge fund confidence signal is positive, and have increased holdings by 383.8 thousand shares last quarter. Looking at an overview of age groups that hold Barings BDC stock, it seems that those between 35 to 55 are the largest holders. Public companies must disclose risks affecting the business and the stock. These disclosures are known as risk factors. Barings disclosed 83 risk factors in its most recent earnings report. They reported the most risks in the finance and corporate category. Let me know what you think in the comments. Number 3, Capital Southwest Corporation, ticker CSWC. Capital Southwest Corporation is a venture capital investment company whose objective is to achieve capital appreciation through long-term investments in businesses with good growth potential. Looking at the daily chart, we see a 25% discount off the trailing 12-month period. Zacks Research ranks Capital Southwest as a rank 2 buy with an overall VGM score of F. Looking at tip ranks, they score them with a number 9, outperform, based on 3 Wall Street analysts offering 12-month price targets for Capital Southwest in the last 3 months. The average price target is $21.33, with a high forecast of $22 and a low forecast of $20. The average price target represents an 18.24% change from the last $18.04. Capital Southwest's market cap is currently $592.50 million. The company's earnings per share trailing 12 months is $1.76. Its PE ratio is 10.51, and it has a dividend yield of 10.11%. Capital Southwest is scheduled to report earnings on February 5, 2023, and the estimated EPS forecast is 56 cents. Last quarter, Q2 2023, Capital Southwest's total revenue was $16.60 million, a decrease of -6.44% from the same quarter the previous year. In Q2, Capital Southwest's net income was $9.46 million. Capital Southwest's total assets for Q2 2023 were $1.11 billion, an increase of 5.62% from the previous quarter. Their total liabilities were $637.45 million for the fiscal quarter, a 6.07% decrease from the last quarter. Their free cash flow for Q2 2023 was -$25.75 million. For the 2023 fiscal year, their free cash flow decreased by -$116.42 million, and operating cash flow was -$25.75 million. Capital Southwest pays dividends every quarter. Their next ex-dividend date is December 13th. Their dividend per share is 52 cents, with a yield of 10.11%. Their payout ratio is 127.62%, which is not sustainable. Using the dividend calculator, buying 250 shares, with a total investment of $4,510, including the DRIP strategy, and holding these shares for 10 years, we can see an ending balance of $12,240.28. We have a total return of 171.4%, which averages an annual return rate of 17.14%. An initial investment of $4,510 would provide an annual dividend payment of $1,163.08. Hedge fund confidence signal is neutral. Hedge funds decreased holdings by 63.1 thousand shares last quarter. An overview of age groups holding Capital Southwest stock shows that those between 35 to 55 are the largest holders. In the last 30 days, all three age groups have increased their exposure to their holdings. Capital Southwest disclosed 60 risk factors in its most recent earnings report. They reported the most risks in the finance and corporate category. Number 2, Triple Point Venture Growth BDC Corporation, ticker TPVG. Triple Point Venture Growth BDC Corporation is a business development company that seeks investment opportunities in companies located primarily in the US, UK, and Israel. Looking at the daily chart, we see a 24% discount off the trailing 12-month period. Zacks Research ranks Triple Point Venture as a rank 1 strong buy with an overall VGM score of F. Looking at tip ranks, they score them with a number 9, outperform. Based on 4 Wall Street analysts offering 12-month price targets for Triple Point Venture Growth in the last 3 months, the average price target is $14, with a high forecast of $15 and a low forecast of $13. The average price target represents an 8.19% change from the last price of $12.94. Triple Point Venture Growth's market cap is currently $456.9 million. The company's earnings per share trailing 12 months is 17 cents. Its PE ratio is 72.10, and its dividend yield is 11.13%. They're scheduled to report earnings on March 12, 2023, and the estimated EPS forecast is 47 cents. Last quarter, Q3 2022, Triple Point's total revenue was $3.1 million, a decrease of -92.47% from the same quarter the previous year. In Q3, their net income was $432,000. Triple Point Venture Growth's total assets for Q3 2022 were $983.6 million, an increase of 6.68% from the previous quarter. Their total liabilities were $535.7 million for the fiscal quarter, a 3.48% decrease from the last quarter. Their free cash flow for Q3 2022 was -$84.1 million. For the 2022 fiscal year, their free cash flow decreased by -$208.3 million, and operating cash flow was -$84.1 million. Triple Point Venture pays dividends every quarter. Their next ex-dividend date is December 13th. Their dividend per share is 37 cents, with a yield of 11.13%. Their payout ratio is 80.9%, which is sustainable. Using the dividend calculator, buying 350 shares, with a total investment of $4,529, including the DRIP strategy, and holding these shares for 10 years, we can see an ending balance of $13,573.28. We have a total return of 199.7%, which averages an annual return rate of 19.97%. An initial investment of $4,529 would provide an annual dividend payment of $1,410.96. Hedge fund confidence signal is neutral. They have also decreased holdings by 10.6 thousand shares last quarter. Their majority holders are those between 35 to 55. In the last 30 days, those over 55 have increased their holdings by over 20%. Triple Point Venture Growth disclosed 87 risk factors in its most recent earnings report. They reported the most risks in the finance and corporate category. Number 1 on the list, USA Compression Partners, LP, ticker USAC. USA Compression Partners is one of the largest independent natural gas compression services providers across the U.S. in terms of fleet horsepower. The daily chart shows we are up over 35% over the last 12 months. Zacks Research ranks USA Compression Partners as a rank 3 hold with an overall VGM score of C. Looking at tip ranks, they score them with a number 7, neutral. Based on 4 Wall Street analysts offering 12-month price targets for USA Compression in the last 3 months, the average price target is $18.25, with a high forecast of $19 and a low forecast of $17. The average price target represents a minus 1.93% change from the last price of $18.61. USA Compression's market cap is currently $1.8 billion. The company's earnings per share trailing 12 months is minus 24 cents. Its PE ratio is minus 75.59, with a dividend yield of 11.52%. USA Compression is scheduled to report earnings on February 12, 2023, and the estimated EPS forecast is 2 cents. Last quarter, Q3 2022, their total revenue was $179.6 million, an increase of 13.23% from the previous quarter. In Q3, their net income was minus $2.5 million. Their total assets for Q3 2022 were $2.6 billion, a decrease of minus 1.71% from the previous quarter. Their total liabilities were $2.2 billion for the fiscal quarter, a 0.29% decrease from the previous quarter. Their free cash flow for Q3 2022 was $4.9 million. For the 2022 fiscal year, their free cash flow decreased by $36 million, and operating cash flow was $49.2 million. USAC pays dividends every quarter. Their last ex-dividend date was October 20th. Their dividend per share is 52 cents, with a yield of 11.52%. Their payout ratio is minus 873.33%, which is not sustainable. Using the dividend calculator, buying 250 shares, with a total investment of $4,604.20, including the DRIP strategy, and holding these shares for 10 years, we can see an ending balance of $14,194.77. We have a total return of 208.3%, which averages an annual return rate of 20.83%. An initial investment of $4,604.20 would provide an annual dividend payment of $1,511.51. Hedge fund confidence signal is neutral, but they decreased holdings by 320.8 thousand shares last quarter. Their majority holders are those between 35 to 55. In the last 30 days, those over 55 have increased their holdings by 7.5%. USA Compression disclosed 64 risk factors in its most recent earnings report. They reported the most risks in the finance and corporate category. Bottom line, dividends can be a great way to boost your investment portfolio's income when stocks are doing poorly, inflation is rising, or you're worried about a recession. Buying these stocks with a one-time investment can pay off hugely within the near future. Please let me know your thoughts about these 4 high-yield dividend stocks in the comments. Are these too high risk or perfect for higher returns? Thanks for watching. If you've made it this far, please check out my other videos. Peace.